Hey, how's everyone doing? I'll be with you guys shortly. Let me get a few more things balanced out here. Haven't done a live stream in a couple weeks and got some things that just aren't working quite right yet. So hang on, I'll be right there with you guys. Quick roll call, Mutant Ref, first guy here. Okay, Patrick Bateman, how you doing? Greetings, Bay Creek History Detectives, how you doing? Yeah, Silver's having a big run this morning again. TPT Actual, Pudenda Johnson, how you doing? Let's see. Carrie Ellen Welder, how you doing? Pablo Pena, Seymour Rivers, how you doing? Yodi, how you doing? And yeah, there we go. So I'll get a few more things in order here, and we'll go ahead and get started. If you can, just let me know. Yeah, thank you, Seymour, how the audio is coming in. So hang on, I'll be with you guys in about a minute or so. Thanks. Hello again, everyone. Welcome to another edition of Silver Bullion Television, SBTV. I'm your host, Patrick Vieira. Glad you all could be here. It's getting close to Christmas, so hopefully can help get us all in the Christmas spirit. Again, hope everyone's doing fine out there. Quick roll call once again. Seymour Rivers, how you doing? Miss M. Schroll 99, how you doing? Patrick Bateman again, Truth Monster. How you doing? Haven't seen you guys in a while. We've been very very busy the past couple weeks, and we're going to let you folks know about it probably within a few weeks ahead. Fat Vegan, how you doing? Buckwheat, Ote, glad you're here. Again, Pablo Pena, Jan Morgan Orr, how you doing, ma'am? First time I've seen you here. Welcome aboard. Scooby-ism, first time I've seen you here as well. How you doing? Yeah, Silver Spot been really on the move. I think it's up some 80 cents, or it was, I think, up some 80 cents or so. Pablo Pena, MX Old Timer, Brap, how you doing? So again, glad you all could be here. And if it's your first time here, or even if you haven't already done so, please do subscribe, hit the bell to be notified on new updates, and give us a thumbs up. We really do appreciate it. We There's nothing better than thumbs up and nothing better than your comments out there, because as always, your comments are truly what help people make decisions. And you can find us on social media. Silverbullion.com.sg is our website. We are we do sell silver and gold, precious metals, but we do um I'm going to say we do specialize in systemic wealth protection. So that is one thing that we really something that our founder Gregor Gregerson could see coming ahead, and he started positioning the company in a way where it can help people when it comes to systemic wealth protection. So I hope you do check us out, www.silverbullion.com.sg. Silver Bullion SG is our Twitter handle or Facebook handle. Silver Bullion PL is where you can find us on Twitter. Audio versions bit.ly SBTV iTunes, SBTV Spotify, and Crisis Tracker. If you have Telegram, or even if you don't, do download that app, um, desktop, mobile phone. And this is where Vincent, my colleague, and I sometimes, but we will post things as it relates to the economy, silver, gold, uh, help you sort of sift through a lot of things. So it's just a quick way to get up to speed with things. So again, we thank you all for being here once again. Let me see what's out there. Um, yeah, okay. So Pablo Pena, Jan Morgan Orr, School. Okay, just going through the names real quick. Kent Thielen, first time I've seen your name here. Welcome aboard. If you are new, go ahead and type in new and where you're from, and we'll see if we can get you a quick acknowledgement there. Gary Downs, how you doing? Lillian Winston, greetings from Chicago, Illinois. Welcome aboard. The Seeker 2020 Super Sticker. Okay, thank you. Thanks for that. Alex Connor, uh, tough name there. Katanol Kasi. Sorry, I know I'm mispronouncing it. Silver Secret, thank you again. Appreciate it. Let's see. Miriam Lewis, Edwin Rivera, how you doing? Beer Guy. Uh, okay, so just going through some names here. Looks like we got a few new people. Uh, Agab El Gadal, you're welcome. We try to do what we can. We try to do what we can. Um, we are in a different time zone, New York City. Okay, yeah, we try to put it where it's 9 p.m. Eastern, and we find that that seems to be a fairly decent time. It works for guys in the states. It works for us in Singapore, Europe. It's still tough. If you're here, we appreciate you being here. I know the time difference is pretty it's not that easy right now, but we appreciate it also. American Rebel, appreciate that, my friend. Really do appreciate that. Um, let's see, get this one out there. Yeah, happy Christmas, Merry Christmas to you too, and the SBTV community. We appreciate your support very much. Okay, so let's run through some things we're going to have. I do believe our guest next week is going to be EB Tucker. I think it's next week. Our schedules are a bit thrown off with the holiday season right now. And I do believe he does write for the Casey Report. And, prior to joining Casey, he served as an analyst or the lead analyst on Stansberry's investment advisory. And before joining Stansberry, Mr. Tucker was a founding partner of KSIR Capital Management, an asset management firm focused on precious metal equities. So we're looking forward to that interview coming up with EB Tucker. Let me run through a few more things here again. Hidden Numismatis, thank you again, my friend. You're always out there supporting us. We appreciate that. Merry Christmas to you as well and your family. Appreciate it very much. And so we're going to be having, I think it's going to be EB Tucker. And he's the author of the book Why Gold, Why Now? And this is the book that will be given away for our He Said What contest, or Kindle ebook, I should say. So why gold, why now? There's a reason why the world's elite count gold as a core asset. And during periods of financial turmoil, it's invaluable. Gold is the only asset that's not someone else's liability. Apartments rely on paying tenants. Stocks rely on company profits. Bonds rely on stable interest payments. Gold does not rely on anyone or anything for its value. And Tucker guides investors in simple terms through the ways to own gold, from physical bars to coins and even mining stocks. And he reveals his favorite method: gold royalty companies. Rules to the game. We all know this by now, right? Download that Kindle app. It's a free app for your mobile phone, for your tablet. And because what we're going to do is give away a Kindle ebook. Be the first to answer the question correctly within a minute and a half. I believe we're gonna allow for that time. Has to be within that time. U.S. winners are going to be given a link to download the ebook. Winners outside the U.S. are going to be offered an alternative prize at our discretion. Again, that's because Kindle does not allow gifting ebooks outside of the U.S., or Amazon doesn't allow for that. So we have to make alternative arrangements and provide us an email during this live stream. What will happen is my colleague Vincent, he's standing by. He will mute your conversation or your comments, and you can go ahead and send your email to Vincent, and nobody will see it except for you and Vincent. So that's how we work around that. So we'll go ahead and get started with the question here. Fat Vegan, thank you. We appreciate that as well. Merry Christmas to you as well. Happy holidays, my friend. Okay, so we'll go ahead and get started with the question, and it comes from Tavi Costa's interview, which I think was about 2 weeks ago now. So the question is, Tavi Costa said the appreciation in Bitcoin would probably explain about blank percent of the decline in gold. Think it through a little bit. This was a couple weeks ago. And we have seen Bitcoin run up quite a bit. And a lot of people were saying it's taken a big share of the gold market. And Tavi disagrees with that. And he gives a number. Blank percent of the decline in gold might be, or maybe from Bitcoin or the Bitcoin market taking a little bit share of the gold market. So go ahead and let us know what you think. Blank percent of the decline of gold. So we'll look for some answers here. 0%, 0%. Nick Nasty, 10%. What else is out there? Fat Vegan, 0%. Sean Walker, 50. Miriam Lewis, 0. Seymour Rivers, 0. Patrick Bateman, 60. Okay, this is according to what Tavi Costa said now, and the answer is going to come from that interview. Milled still 1%, 0. I see a lot of zeros out there. Let's see. Pauser Bob, 150 pesos. Agab, 25. Penny Pinch and Prepper, 0. Bushman, 2%. Edwin, 20. Nicholas Nasty, 2. Okay. Manny, Bitcoin took share from all markets. Let's see, probably 5 to 10% in the future. Okay, we do have one winner. We do have one guy, and I'll play Tavi's clip, and you'll see what the answer is according to Tavi Costa.
There is a narrative out there that Bitcoin has been stealing the inflows from gold, and that's just absurd. Bitcoin probably got 200 billion of appreciation in their market cap, and gold lost about $2 trillion. So this decline in this appreciation in Bitcoin will probably explain about 10% of the decline in gold, and so it's not valid, that comparison in my view.
Okay, so the answer was 10%. We did have one guy who answered it in time. Nicholas Nasty, you were the first guy to get it. Scooping up the ebooks, my friend. So you'll be getting the copy of or the Kindle ebook version of E.B. Tucker's Why Gold, Why Now. And I did see one sneak in there kind of late. We'll still give it. Built for Tough will be giving you the alternate prize of Build Your Own Bank by Aon Schmidt. It's a pretty good book. It's a very good book, actually, where he lays out alternatives in a way where you can start to build your own bank. So Nicholas Nasty, you'll be getting E.B. Tucker's Why Gold, Why Now. And Built for Tough, you're going to be getting the alternate prize of Build Your Own Bank by Aon Schmidt. So again, we thank you all for playing that game. And let's move on. Let's check out that silver price. I know there's some big movements going on this morning here in Asia. So let me scroll down a bit. We are closed Christmas Day, December 25th. US dollars, silver's at 26.69. It's up some 85 cents per ounce. Gold heading back to 1900, 1897 right now, up $15 so far this morning. Nickel, 17,000, over 17,000, working its way up to 18,000. Nickel has been making some pretty good moves this year. In fact, I think right now it's higher than it was at the beginning of the year. So we had seen nickel dip all the way down in March, very low, and it's rebounded quite a bit to where now it's back above its New Year levels. So nickel doing pretty good. Investor kit, when you come to our website, silverbullion.com.sg, you can go ahead and click on this, and it's a free PDF. You can either open it up here on the webpage, or you can also download it as well. These are reasons why you should be looking at silver, gold, why you should be looking at things like if it is in your interest to be storing perhaps in a different jurisdiction. And this is our sign up page. It is free. There's no maintenance fees, where you can go ahead and get the process started. You simply never know when you may want to move your assets overseas or start storing in a different jurisdiction. So these are two free things, both very, very handy. We do hope you sign up for these storage accounts. There are, like I said, we do specialize in systemic wealth protection. So we do have programs that will help and are built for that specific purpose. Gold to silver ratio, 71.1. It was 72 earlier, so it's creeping down. May get back below 70 by year's end. Let's see how this goes. Silver to gold ratio. And so those are some things we look at, and we also look at Twitter, see what's going on in the Twitter sphere. I bookmarked a few things. This one I haven't really had time to fully look at yet, just bits and pieces. But visiting bad websites will lower your credit score, says IMF, and that's what caught my attention. Was it came from the IMF? So I will have to check into this a bit more. But if you want, you can go ahead and start digging in on this on your own as well. It's pretty interesting why the IMF would be concerned about where you're going on the web. Peter Schiff, gold is an inflation hedge because it's also a commodity. And we've talked about this before. When inflation reduces the purchasing power of fiat currencies, it takes more units of the inflated currency to buy a given commodity. Since gold is a commodity, it maintains its value relative to other commodities. And we've been saying real things are going to be needed to buy real things. And in this case, gold is measured as well against other commodities, so it is in a sphere where it should hold the value. It will hold the value, and that's why people look to things like gold and silver as stores of wealth. Because when it comes to real things like commodities, gold holds the value of your currencies. It stores wealth. Uh, this one breaking. It's a bit old now. I think everybody knows about this. Dutch government bans air travel from the UK due to the mutation of the bug. So even with these vaccines coming up, apparently the bug is still mutating. From Financial Times, talking about the stimulus package. I think we'll touch this a bit later. Dave Kranzler, Treasury proposes crackdown on virtual currency transfers. U.S. Treasury Department said Friday it is proposing new requirements involving convertible virtual currencies. This is from Bloomberg. I think we may have to get a Bloomberg subscription so we can follow through with these articles. Peter Schiff again. Bitcoin won't steal gold status as a safe haven. Bitcoin won't dethrone gold as the currency of last resort, according to Goldman Sachs Group. So let's take a quick peek at this. Let me see if I can play this video here, if it'll run for you guys. Hopefully it will. Okay, so let's get this going. I'm not sure if this is going to play.
Let's get to Bitcoin. Why not? It's had quite a run recently. It's hovering still very close to record levels. 22.5 is your price right now. I want to bring in Jonathan Honig, who I always think of as a classic libertarian and a man who should be really getting himself right behind Bitcoin. Are you right behind Bitcoin, Jonathan Honig?
Well, I own one Bitcoin, and it's been an astounding asset for me this year, Stuart. But a currency can't change a culture. It can make people a lot of money, at least in a short period of time. I mean, think about it. Bitcoin is up 25% in 5 days. It's up about 215% just this year and 500% over the last 2 years. Hard to find a lot of assets that have done so well, especially assets that, at least for now, have really no use, at least use as a currency. And Stuart, the old saying, if it kind of looks like a duck, talks like a duck, walks like a duck, and it is a duck. And in this case, I do think that Bitcoin is a bubble. I remember Pets.com. I remember Press Tech. Yeah. I even remember Cisco back in the late 1990s. It's the great fool theory. Hope that someone else comes along to buy this asset at a higher price. That's how I'm playing Bitcoin.
So if you're looking for a hedge against inflation or a hedge against uncertainty, you would go to gold as opposed to Bitcoin, right?
Well, I think a rising tide lifts all boats. One of the big themes we've seen in the last couple of weeks is the outperformance of commodities, Bitcoins, hard assets, anything to hedge, exactly as what you're saying, Stuart, the weak dollar. But when I look at Bitcoin, it almost reminds me of something like let's say bandwidth back in the late 1990s. Bandwidth used to be valuable. That used to be traded. Now it's free. So I do think blockchain, now that is the technology behind Bitcoin. I think it's going to be very successful, very widespread, very ubiquitous. But in terms of putting a lot of our own money into Bitcoin right now, here's how I'd play it. If you're bullish on Bitcoin, buy Bitcoin, but don't buy it on the way down. Don't add every time it goes down, add more and more and more, because the trend is telling you you're on the wrong track. But there's no tops in a bull market. And Stuart, the fact that it's at an all-time high, lends credence to the fact it's going to make another all-time high, probably even later today.
I always have a hard time buying something that's going straight up and spiking. It takes a very strong stomach, doesn't it, to do that? But you're the
Yeah,
man
well,
to
I
do
mean,
it.
whatever hurts people is never that they buy the high. You could have bought pets.com up at the all-time high, but as long as you didn't keep adding on the way down, that's where people really hang themselves. There's an old saying, Stuart, losers average losers. Think about that the next time you want to buy a stock that's you're already down 20%, or same thing with Bitcoin as well.
I'm not going to talk to you about my experiences with Boeing stock or anything else, but you're right, Jonathan.
there.
You're right. Yeah, we've all been there.
Okay, so that was Jonathan. Let me see where to go. Patrick Bateman, I'm with you. I like this guy. Sometimes he's right, sometimes he's wrong. I guess even sometimes you like him, sometimes you don't. But Jonathan always has interesting perspectives for sure. So that was coming from Fox Business. Take a look at this picture. What I'm curious, what emotion does it get you to feel when we see this here? Christine Lagarde congratulating her friend Janet Yellen on her nomination. This was back in November 30 as U.S. Treasury Secretary. Her intelligence, tenacity, and calm approach make Janet a trailblazer for women everywhere. I look forward to tackling yet again the global economic challenges we are facing together. And this part kind of interested me. It where she says, "I look forward to tackling yet again the global economic challenges we are facing together." I think that's a bit of a strange statement to say, but that's a look at what's going on in Twitter. So moving on, I want to go back and revisit a few things that Jerome Powell had said last week. I think there are 4 clips that I have that we'll run through, and he said once again some pretty interesting things. So I just want to play what Jerome Powell says, minus the cough. We won't go after him with the cough this time. Jerome Powell, clip 1.
On inflation. Following large declines in the spring, consumer prices picked up over the summer, but have leveled out more recently. For those sectors that have been most adversely affected by the pandemic, prices remain particularly soft. Overall, on a 12-month basis, inflation remains below our 2% longer-run objective. The median inflation projection from FOMC participants rises from 1.2% this year to 1.8% next year, and reaches 2% in 2023. As we have emphasized throughout the pandemic, the outlook for the economy is extraordinarily uncertain and will depend in large part on the course of the virus. Recent news on vaccines has been very positive. However, significant challenges and uncertainties remain with regard to the timing, production, and distribution of vaccines, as well as their efficacy across different groups. It remains difficult to assess the timing and scope of the economic implications of these developments. The ongoing surge in new COVID-19 cases, both here in the United States and abroad, is particularly concerning, and the next few months are likely to be very challenging. All of us have a role to play in our nation's response to the pandemic. Following the advice of public health professionals to keep appropriate social distances and to wear masks in public will help get the economy back to full strength. A full economic recovery is unlikely until people are confident that it is safe to re-engage in a broad range of activities.
Okay, so let's dissect what Jerome said. Feel free to put your opinions in the comments section as well. Your opinions just as good as mine, right? Everybody has opinions, so don't be afraid to go ahead and express it. According to Jay, or my take on according to Jay, consumer prices had an uptick. Okay, so this is coming from Jay Powell. But on a 12-month basis, inflation is still running below their 2% objective. Okay, so a little bit of a couple back steps there. Economic outlook extremely uncertain. He's been saying this for quite a while now. And the virus still has a controlling role over the economy. And we're seeing this. News of the vaccine is going to move the market. It's going to move precious metals. We're seeing how markets are reacting to news of a so-called vaccine. We've been seeing how public is reacting. We're seeing how governments are reacting. Everyone has a reaction to the vaccine. But let's hope not a literal reaction if you end up getting the vaccine. And he does say follow the doctor's advice. in a nutshell, what I get from this is prices are rising. That's inflation, but not enough. Fed is not happy with it yet. So reading between the lines, I'm sort of reading that Jay is saying, wear your mask, get out, spend money. We need the velocity of money so we can get that inflation, which is going to make things cost more. Kind of strange, but reading between the lines, that's what you kind of get that Jay is saying there. So let me take a look at a few of the comments. Let's see here. Path Traveler. We are the bottom rung in their Ponzi scheme. It's an interesting way to look at it. Very, very interesting way to look at it. Wonder what the top rung looks like, huh? So let's see. Any other comment out there? Okay, let me continue on. Another clip from Jay Powell.
The Fed's response to this crisis has been guided by our mandate to promote maximum employment and stable prices for the American people, along with our responsibilities to promote the stability of the financial system. As noted in our statement on longer-run goals and monetary policy strategy, we view maximum employment as a broad-based and inclusive goal. Our ability to achieve maximum employment in the years ahead depends importantly on having longer-term inflation expectations well anchored at 2%. As we reiterated in today's statement, with inflation running persistently below 2%, we will aim to achieve inflation moderately above 2% for some time, so that inflation averages 2% over time and longer-term inflation expectations remain well anchored at 2%. We expect to maintain an accommodative stance of monetary policy until these employment and inflation outcomes are achieved. With regard to interest rates, we continue to expect it will be appropriate to maintain the current 0 to 1/4% target range for the federal funds rate until labor market conditions have reached levels consistent with the committee's assessment of maximum employment, and inflation has risen to 2% and is on track to moderately exceed 2% for some time.
Okay, so again, my take, according to Jay, let it rip. Let it rip. Release the Kraken inflation or the inflation Kraken. But don't worry, we're not going to raise rates until that money printer is just basically going to fall off. The Fed, you kind of get the sense the Fed truly has no idea. I mean, Jay, he kind of sped through what it will take to downshift the money printing press. In short, as we've talked about the printing press, it's going to keep going until those bearings start smoking, the wheels fall off, and at that point, if you're still holding cash, good luck to you. Another clip from Jay Powell.
In addition, as we noted in today's policy statement, we will continue to increase our holdings of Treasury securities by at least $80 billion per month and of agency mortgage-backed securities by at least $40 billion per month until substantial further progress has been made toward our maximum employment and price stability goals. We believe the increase in our balance sheet this year has materially eased financial conditions and is providing substantial support to the economy. Combined with our forward guidance for the federal funds rate, our enhanced balance sheet guidance will ensure that the stance of monetary policy remains highly accommodative as the recovery progresses. Our guidance is outcome-based and is tied to progress toward reaching our employment and inflation goals. Thus, if progress toward our goals were to slow, the guidance would convey our intention to increase policy accommodation through a lower expected path of the federal funds rate and a higher expected path of the balance sheet. Overall, our interest rate and balance sheet tools are providing powerful support to the economy and will continue to do so.
Okay, so you guys caught that. According to Jay, or at least my take on what Jay is saying, Treasury holdings to increase to at least, keyword he said there, at least 80 billion per month. And he followed up, doubled down. Agency mortgage-backed securities, at least 40 billion per month. I thought, we're supposed to be looking at a recovery here. Nowhere near out of the woods at all. Ballooning balance sheet, eased financial conditions. Okay, well, we'll see on that. I'm having a hard time with that one as well. Enhanced balance sheet guidance is a word he used. I think we could just call that more QE. At the very least, we could call that more QE. And we're barely keeping our heads above going negative. But hopefully you won't notice this. Okay, so what is the substantial progress? Is the Fed buying up what no one else wants to buy anymore? I mean, China and other countries simply are not buying. They're not buying treasuries the way they used to. Someone has to buy that U.S. debt, and that's Uncle Jerome. And again, consider these things possibly loans as well. So we are nowhere near out of the woods yet, as mentioned. And again, this is where stores of value. If you're out there, you're on the fence. You're looking at Bitcoin rising, things like that. You don't know what to do. You're looking at the stock market rising, but you realize there's sort of a disconnect going on here. How can you have some of the highest unemployment ever, yet have markets at their highest ever as well? The two just don't go together. And this is where stores of value actually really do come into play, because you need some sort of insurance for what's going on right now. Another clip from Jay Powell.
The Federal Reserve has also been taking broad and forceful actions to more directly support the flow of credit in the economy for households, for businesses large and small, and for state and local governments. Preserving the flow of credit is essential for mitigating damage to the economy and promoting a robust recovery. Many of our programs rely on emergency lending powers that require the support of the Treasury Department and are available only in very unusual circumstances, such as those we find ourselves in today. These programs serve as a backstop to key credit markets and have helped to restore the flow of credit from private lenders through normal channels. We have deployed these lending powers to an unprecedented extent, enabled in large part by financial backing and support from Congress and the Treasury. Although funds from the CARES Act will not be available to support new loans or new purchases of assets after December 31, the Treasury could authorize support for emerging lending facilities if needed through the Exchange Stabilization Fund. When the time comes, after the crisis has passed, we will put these emergency tools back in the box. As I have emphasized before, these are lending powers, not spending powers. The Fed cannot grant money to particular beneficiaries. We can only create programs or facilities with broad-based eligibility to make loans to solvent entities with the expectation that the loans will be repaid. Many borrowers are benefiting from these programs, as is the overall economy. But for many others, getting a loan that may be difficult to repay may not be the answer. In these cases, direct fiscal support may be needed. Elected officials have the power to tax and spend and to make decisions about where we, as a society, should direct our collective resources. The fiscal policy actions that have been taken thus far have made a critical difference to families, businesses, and communities across the country. Even so, the current economic downturn is the most severe of our lifetimes. It will take a while to get back to the levels of economic activity and employment that prevailed at the beginning of this year, and it may take continued support from both monetary and fiscal policy to achieve that.
Okay, so one last comment from Casey Willis. Printing money is the government's turn to self-cannibalization. You could, absolutely say that. I completely agree with you there. According to Jerome, again, not in his words, but our take or my take on what he's saying, again, it's all a loan. They cannot do it all. And don't point your pitchforks at us. Point them at your legislators. He's trying to deflect things there. So with that, I want to go ahead and move into 5 things that we're going to watch for 2021. And again, this part, I really want to see your opinions here. With the new year just about upon us, these things are in the news and will undoubtedly be news all year long coming into 2021. So I want to get your opinions on things like the vaccine, stimulus, deflation, inflation, hyperinflation, pick your poison, CBDCs, central bank digital currencies, and of course, precious metals. So these are just some of the hot topics that are going to run through. They're not going to let up. These things are going to run through 2021. So I'd like to get your opinions on these 5 topics here. The vaccine, we'll start with this. Is it going to heal the economy? So again, feel free to put your opinions as well. In my opinion, the economy, it's not going to heal. It's not going to recover. Instead, I believe it's going to roll over. It's going to roll over and the economy will become a new economy. Now, why am I saying this? Well, you don't have to take my word for it. That's coming directly from Jerome Powell, and I'll play this clip just to back it up.
I'll mention one more thing, if I may, Alex, and that is from the very start, we've been concerned about longer run damage to the productive capacity of the economy. And what that looks like is workers who are out of work for long periods of time. They may lose their contact with the labor market. They may lose their skills. And the evidence is strong that if you're out of work for a long time, it may be hard to get back the life that you had, get back to the work that you had. For families in particular, particularly women, leaving the workforce in big numbers now as children stay home, we're seeing that. And so you could see women who, not by preference, but by requirement, are at home and their careers may be hurt. And for businesses, something like this can lead to unnecessary insolvencies, and there are always going to be insolvencies, but there could be more than, and that would be tragic for particularly for smaller businesses, which may have taken generations to build. So we got a long way to go. The last thing I'll say is we're not going back to the same economy. We're going back to a different economy, and we can talk more about that. But this economy will be different, and that's going to mean that those people who worked in the service industry, they may need help and support for a time as they find work in new places. So the Fed will stay here and be strongly committed to using all of our tools to support the recovery for as long as it takes until the job is well and truly done.
Okay, so new economy. This is why I say I maybe don't think about a recovery. Don't think about any of that stuff because it looks like we're going to be coming into a new economy, and we've had we played past clips on past live streams, excuse me, where Kevin O'Leary, he had also mentioned how businesses are going to have to change, they're going to have to adapt, and we're not going back to the economy the way it was. I know a lot of us don't like that word, new normal, but I don't think we've even found that new normal yet, and probably not until that new economy comes in. And one of the things they're looking at is you can't really have that new economy unless you take the vaccine. We said before, healthy people, you need a healthy people to have a healthy population. So I want to take a look at some of your comments here. Let's see. Path Traveler, new economy, super wealthy and really poor. Middle class is getting decimated. There's no doubt about that. The wealthy, they worked hard. You got to give it to them. Okay, they worked hard, and they are trying to protect themselves, their wealth, just like you. Okay, there's no difference there. In some cases, they will store things overseas in different jurisdictions. For others, in some cases, it's more of a if you don't hold it, you don't own it type of a thing. So it really just depends what type of situation that you're in. Let me see what else is out there. Yeah, no wrong. Some shit, some shy, some shit. Sorry about that. It's coming near, well, for sure. You can kind of feel it, right? I mean, we're seeing these things really move pretty darn quick nowadays. So let me get to Paul did mention the new economy. So let me just add in a few thoughts there. The vaccine, I'm not a doctor to speak on the physical attributes of it. However, to me, the vaccine, I mean, let's be real. It's also a psychological treatment to give people confidence, and assurance to go back to work, albeit in this new economy. And we've spoken about this before in past live streams where you cannot have a healthy economy without a healthy people. And what I missed at that time really was a healthy people or healthy population also encompasses people mentally being healthy, because right now there's still a lot of fear, and we got to get in the right mindset in order to move forward. We have to feel comfortable with what's going on. The fear of the pandemic has to be removed, whether you believe it in or not. You look around, there's a lot of fear. That's real. You do see people who are worried about this, and it has to be removed from the population in order to get to this new economy. Again, you need healthy people to have a healthy economy. Otherwise, this new economy is not going to work. Okay, so one more opinion here. I find it amazing, though, how a vaccine, a new economy, and potentially central bank digital currencies seem to be coming in, or at least pretty close to one another at the same time, or close to being at the same time. Again, the new economy includes the vaccine and perhaps even phasing out cash and coin for central bank digital currencies. And in all this vaccine, we're still looking into 2022, 2023 to get back to where we were. So even with this vaccine, things aren't going to happen overnight. There's still a very, very long way to go. So I want to take a look at a few more opinions here. Let's see. Justin Oliver, yes, silver is up. It's been doing pretty good this morning here in Asia. Let's see what else your opinions on it. Curious to know your opinions on the vaccine here. Um, okay, let's see. Let me just scroll through this. Apologize, I'm just running through this right now. Uh, Gary Downs, in some ways, you know, you kind of see this, right? I mean, businesses are struggling, and you do see the double standard where a government in one state may say you can't do this, you can't do that, but then again, they'll let someone else do it, and kind of makes you wonder, you know, about this double standard going on. That is true there. Um, let's see what else is out here. But it just goes to show again when you look at things like governments and governments throughout the world seem to be getting a bit more unstable, and you just don't know if they're going to be a bit more heavy-handed with things. So again, this is why you want to move into stores of wealth, and in some cases, holding your assets in different jurisdictions, diverse jurisdictions. Okay, so let me run through this again. Let's see. Mutant. Good point. Correction in gold and silver doesn't mean that the manipulation in gold and silver is over. That's a great point. But it does seem that it's getting harder and harder to hold down. I mean, you do see those days where they basically fall off a cliff. You look at the charts; it's a waterfall, but they do come back up. And I think we have silver it's up above its 50 and 200-day moving average. It's well above it now. And the last few times we saw silver just about touch its 50-day moving average, we saw it get hammered down. But this time it's broken through, and gold is moving up as well. So that part is pretty interesting when you take a look at it, because it, like I said, whenever it would touch that 50-day moving average, you would see it move back down. You'd see it retreat. But this time, no, it's firmly broken through. So we'll see how this thing plays out. Moving on, um, it's not just going to be the USD that takes a hit. The euro is going to follow, and if you look at what's going on in Europe with the ECB, the European Central Bank, they more or less carbon copy of sorts with what's going on in the Fed, or maybe the Fed is a carbon copy of sorts with what's going on in the ECB. And for that, I'll just take a look at this article real quick here, where from the New York Times, if it'll open for me. Oh no, I don't think it will. Well, let's see. European Central Bank steps up its stimulus as the economy contracts. Central Bank said it expected the economic impact of the pandemic to last well into 2022, prompting an expansion of relief programs. So let's take a look at this article here. The European Central Bank delivered another dose of stimulus to the Eurozone economy last week, a couple weeks ago, warning that the economic crisis caused by the pandemic is likely to linger well into 2022 despite the rollout of new vaccines. So even if these vaccines do come into play, it's still going to be a while. The bank's governing council, be a while before economies get going, I should say. The bank's governing council, which met on Wednesday and Thursday of the other week, last week, intended to keep borrowing costs low for Eurozone businesses and consumers reeling from heightened lockdowns and mounting job losses. And since this article was posted, things have gotten a little bit more worse regarding the bug over in Europe. And the measures include a de facto money printing program worth more than $2 trillion and an initiative that effectively pays banks to lend money to businesses and consumers. Interesting concept there. Second wave of coronavirus cases is causing the Eurozone economy to contract again in the final months of the year. Christine Lagarde, the central bank's president, said during a news conference to explain the rationale behind the decisions. The most recent data, Ms. Lagarde said, suggests a more pronounced near-term impact of the pandemic on the economy and a more protracted weakness in inflation than previously thought. So again, ECB, same thing. Low rates, no velocity of money. There, it's the same deal on both sides of the Atlantic. Eurozone will not achieve herd immunity to the virus until the end of 2021, and the economy will not regain its pre-pandemic strength until the middle of 2022. Even with vaccines, or even after vaccines render most people immune, the European Central Bank will need to keep pumping money into the Eurozone to push up chronically low inflation. Economists say consumer prices fell at an annual rate of 0.3% in November and are not expected to begin rising until sometime next year. And the ECB is also looking at keeping the inflation close to 2%. And they don't expect to hit that target any time soon. So, in a nutshell, let's look at it this way. You have the number one and number two currencies in the world by way of, let's just say, these currencies are used the most in the world. Number one and number two, US dollar and the euro. And they're both, let's just be honest here, they're both set on a course for self-destruction. They are both debasing. It's, as some of you said, counterfeiting. The train basically has left the station. There's no brakes, and perhaps a 2021 cliff is in sight. And what we are seeing is indeed the currencies that we use, the world uses, being printed to kingdom come as more and more people receive a government paycheck, either through stimulus or government infrastructure jobs. Eventually, that velocity of money is going to kick in. It's going to kick in at some point. And hyperinflation, deflation, it's going to come in, for sure. A lot of people are looking more at inflation, I should say. So for that, I want to play one clip from Doug Casey. But before I do that, let me take a look at some of your comments here. Okay, so a few talk on the conversation on the vaccine still. Let's see. Silver Surfer, it will never be the way it was before March 2020. I have to agree with you. Things have definitely changed. When you get guys at the top saying new economy, why even use the word recovery anymore? It seems like this one is just going to run until it breaks, and then a new economy will come in. So again, stores of value, get yourself some gold, get yourself some silver. It's not financial advice, professional or otherwise. It's just this community sharing what we do, and a lot of us do have some gold and we have some silver because we do see currencies really going to falter. Systemic wealth protection, that's what it's about. That's where we need to be right now. It's something that we need to understand. A few comments here, a couple more. Let's. I see what you guys are writing out there, so I'm not going to say everything that you're saying. Funny stuff out there, but okay. Let's just go to Doug Casey, because again, with all this money printing and surely velocity of money is going to kick in at some point. Let's see what Doug Casey has to say.
It'll be chaos. So, I think there will be a panic out of the dollar because it's becoming increasingly a hot potato. There's so much debt in the world, of course. The dollar is needed for that debt. So you've got inflation and deflation that are tearing at each other. Which will win? In the long run, inflation, I think.
Okay, and here's another clip from David Morgan.
At the end stages of the crack up boom, a loaf of bread may be $12. We don't know yet. We're going to go into that kind of a hyperinflationary mode or not remains to be determined. I think not, but I think that it will be inflationary enough for people to think that that's exactly where we're going to be, and that's going to cause the flood out of their savings and into real things.
Okay, so I think we did have deflation already, and Fed stepped in and is on course for inflation. It wants that inflation. And I've also said, or we've talked about on this live stream as well, that if the Fed could not get inflation for a decade, they've been trying and trying and trying. When it comes, the floodgates, they're going to open, and that inflation is going to roll in. It's going to be a rising tide that I don't think the Fed will be able to control, or they may just willingly let it rise as much as they want, and eventually wipe out the USD, wipe out debt. It's what governments do. We already know inflation is in Wall Street with an overvalued market. We see it there with stimulus and perhaps the vaccine, people going to work, government infrastructure type jobs that are going to pay well and they're going to be there for years, if not decades. People are going to start to feel comfortable. They're going to feel confident. They're going to spend. And that velocity of money is going to kick in. And we're probably turning the corner now to get there. It's going to kick in and we're going to see inflation. We're going to see perhaps even hyperinflation. So I want to know your opinions on this. Do you think we're going to deflate still, Harry Dent school, or do you think we're going to see it start to inflate, possibly even run away into hyperinflation? Want to know what your opinions are. Please post them in the comment section there. And what do we know about one remedy for hyperinflation? And we know this through history that central banks and governments, they'll inflate debt away. They're going to inflate it away. And if the currency hyperinflates, they'll simply create a new currency as the old currency inflates away. And they do currently have that new currency waiting in the wings with CBDCs, central bank digital currencies. So I want to know your opinions right now. You think we're going to deflate still? We're going to inflate, or we're going to hyperinflate? Curious to see what you folks think. So let me run through a few comments here. Seymour Rivers, yeah, absolutely. We'd appreciate that. The likes really do help. Really, really, really do help. YouTube hasn't really been our friend lately. It's been a rough going with YouTube. Things have been really, really slow. So yeah, we'd appreciate hitting that like button. Okay, let's see what's out there. Beverly Smith, first time I've seen your name. Welcome aboard. Tech revolution requires new systems and structures. Fed has to change. Fiat has to go. LIBOR and Euribor have to go. They just might. That's a great point that you brought up. It just might. MX Old Timer, you're looking at stagflation. True. I mean, if you look at what Japan did, and if you're looking at what ECB, what the U.S. is doing, they're following in Japan's footsteps right now, man. Japan basically stagflation, lost decade. Stagflation, good point. I didn't throw that in, but that's a good point there. Mutant Ref, I see your comment. Should I put it up or not? Let's see. No. Okay, I see that. Harry Dent. I get it. Yes. So that's a good one. Fat Vegan, stagflation as well. Yeah, that's not going to be a good deal. Very, very hard to get out of stagflation, and Japan is just perpetually stuck in it right now. So it's a great point there. Let's see what else is out there. Okay, Silver Surfer, just like past cycles, metals will move first, followed by soft commodities. Okay, so I understand what you're saying there as well. I think a lot of us are looking at metals to move, but also for it to just be that store of value, which is what it is, which is why we get into it. So moving on, everything we just spoke about, central bank digital currencies, going to be ushered in. I mean, you keep hearing it. Christine Lagarde, she's already promoting, establishing shots over in the ECB about, we want your opinion on digital currencies and this and that. It's already getting you into that mindset, that mind frame that central bank digital currencies are going to come in, and they kind of want you to be a part of it, and they're going to need you to accept it. And again, the other half of it, to get that healthy economy, they're going to need that healthy people. So we are going to see things like vaccine being news all of 2021 long. Okay, and so I just want to give you another look at what's been going on, if you don't already know, with some of these CBDCs. So let's head on over to this website here. This is from ledgerinsights.com. If you don't know about it, and we've gone over this as well, there is a bill in Congress for where COVID-19 plans digital dollar for stimulus to unbanked. It's kind of messed up title there. There is a bill in Congress where they're going to be creating a wallet for central bank digital currencies. That's what's really going on. It's going to include the introduction of a digital dollar or central bank digital currency. Again, this is in Congress already. Unveiling a raft of bills, Maxine Waters, chair of the House Committee on Financial Services, said, "Today I'm proud to lead my colleagues in releasing a package of more than 40 bills to implement this plan, including my legislation to provide up to $2,000 a month for most adults and $1,000 for each of their children during the pandemic." It's quite a good amount of money. It follows the failure of a Republican bill. Let me just try and get to that part here. Okay. The digital dollar bill was launched the next day. This should be early in the year. Yeah, 9 months ago. Okay. Sorry about that. Let me get to it. So the primary aim of the bill is to enable the distribution of funds during the virus. It specifically includes the unbanked and an absence of bank charges. So while former CFTC head Christopher Giancarlo has promoted the idea of the digital dollar, it remains to be seen if he supports it as part of the coronavirus stimulus. So far, he has no comment. Central banks are something that needs to come in. However, hang on, let me just get to that part there. Here you go. The bill involves the creation of an entirely new infrastructure at short notice. Every bank has to set up a separate company that will oversee these pass-through digital wallets, and billions of dollars would flow through this new, unproven infrastructure. Okay, so basically, you're going to hear governments, you're going to hear countries trying to push a digital dollar type of things. You're going to hear things like they're going to take out larger notes. They're going to take out larger notes because of anti-monetary laundering policies, or because of the issues with being able to fund terrorism. So they're going to start taking out large notes. And the interesting thing with this, you know, and I want your opinion on this as well. The interesting thing is, if governments are concerned that large notes, and they're going to start taking them out, if they're concerned that these large notes are because they can be used for money laundering, it can be used for funding terrorism, things like that, why don't governments say anything about cryptocurrencies? I mean, I just want your opinion on this. I'm just throwing this out there because I would think an easier way to move money around the world would be by using cryptocurrency. So it's kind of curious how governments or central banks are going to say things like, this is to your benefit. It's for a safer world. No money laundering, no terrorism, things like that. You can't fund it. And so we'll remove things like larger notes, maybe even cash and coin at some point, and we'll just go digital. But they don't touch right now current cryptocurrencies, when I would think probably it's easier to move money around with cryptocurrencies, but they won't touch it. So that should tell you cryptocurrencies are going to stay. You know, there was a time a lot of us thought it was going to fall, but it should tell you that it's going to stay. When they're making regulations for cryptocurrencies, it means cryptocurrencies, they're going to be here. So pick which one you want wisely. So, you know, can we believe governments and central banks when they tell us CBDCs are going to be good for us? That's something we're going to have to consider. And we may not have a say. We may just see cash and coin eventually phased out, or central bank digital currencies. So again, want to know your opinion on some of these things. Let's see. Hang on. Path Traveler Mnuchin, U.S. Treasury Secretary, stated the other day that cash was never used by criminals. Okay. If he said that, I think he's going against the grain of what they've been saying for some time there. Fat Vegan, yes, absolutely. Hit the like button. Appreciate that. Let's see. Danny the Plumber, an entire generation is retiring That is true. And inflation will suck up all their equity. And that's something, again, we need to be very, very mindful of. A lot of you guys out there getting close to retirement, if not retired already. And if fiat gets in trouble and you're really depending on that check to come in every month, you need to have a store of value, something that will keep that value of that fiat alive, especially if you've already retired. Some sort of a safe haven asset. Again, it's not financial advice, professional or otherwise. It's just sharing opinions and sharing ideas. So a bit more, bit more to say. In some cases, for business, it removes the middleman. I mean, in some cases, for central bank digital currencies, it removes the middleman. It may even remove intermediary banks when international payments are to be made. So it's more of a direct line, which, yes, would be good for businesses, would be good for people making international payments, would be a good thing. But I haven't heard one guest, not one guest, speak positively about central bank digital currencies. And I wonder why. And they all looked at CBDCs as a tool to sort of suppress freedoms and privacy. And I want to play one clip from Franklin Knoll, who does know money. He's a monetary historian, and I asked him that question. What do you say to people who feel that CBDCs and all of these things and the eventual phasing out of cash at some point? Well, what do you say to them when they say things like this is going to limit freedoms and things like that?
I think that's a very valid concern. There are some ideas floating around about CBDCs that take this into account and say we won't track the money, or there won't be a necessity to track the money below a certain transaction level, much like there is today in the US. If you move $10,000 or more, that has to be recorded somewhere. And I couldn't see why a central bank couldn't set up a system saying you're transacting less than $100 or $500. Nobody has to know where that's going. They don't have to track that. And maybe you might tie it to a denomination. I'm not quite sure how that would work in practicality. But central banks are thinking about this. And there has to be a way to do it without impinging on privacy. But it's a really valid concern.
Okay, so precious metals. We'll move on to precious metals. How do you think precious metals will do in 2021? And before I get into that, I just want to run through a few more of the comments. Let me take a look at it here. Let's see. Edwin Rivera, where'd that comment go? Okay. They're asking you for your ID when you deposit 400 cash. Has it gotten to that point already? Really? Has it gotten to that point where just even 400, they want to see your ID? Okay, so be looking for your comment on that. Let's see. Mutants. Social Security should convert all the money I put it into crypto and pay me now. Or put into it in crypto and pay me now. Social Security, that's going to be a rough deal also. I mean, a lot of people say the money is just not there. It's going to run out within our lifetime. Truth Monster, no one wants central bank money, though. It was one of the reasons why crypto came about. It's one of the reasons why we go into things like gold and silver. We have a hard time really accepting the central bank money when we understand what they're doing. And so, again, this is why, fortunately or unfortunately, you still have to have one foot in the financial system. But a lot of us, we're already straddling that line and putting our other foot outside of the financial system. And again, that's an important thing to understand. It's a very important concept to understand. Looking at a few more comments here. Jason, Dr. Doctor. Appreciate it. Chris from Arcadia Economics, he's a good guy. He's one of the nicer guys, genuine guys out there. So I'll make sure Chris sees this and he knows about it. Thank you for that comment. Let's see. Gold and silver and the rest are God money from the earth. We've had a few guests on that have linked things like gold and silver to being God's money through different verses in the Bible, and it actually really makes sense when you look at it. There is there's some truth to it. So that's a great point there. So moving on, precious metals in 2021. Um, we've been interviewing a lot of guys. They've been given short-term price movements, what they expect from silver and gold. One of them being Florian Grumes, and he's looking at certain price targets. And amazingly, this video or interview that we did about a couple weeks ago, he was looking for certain price targets, and he's getting them. So I want to roll this clip from Florian Grumes.
First of all, I want to see gold move back above 1850. I think that's the most important and first step. If it does that, then I think we are in a good way, and it probably then will run towards 1900. It's just a round psychological number, which then probably will be taken out as well. And then we need to take out the November high at 1965. So those are the two other levels besides the 1850. And I think this could happen over the next, maybe 2-3 months. I think it's likely. It could happen quicker as well. We should not forget that we are in a cracker boom and that central banks doing everything to push more liquidity out of nothing into the markets. So, but these are the three levels that I'm looking for now. And then obviously if gold takes out 1965, it would be the next psychological round number at 2000. And then we're talking already the all-time high at 2075.
Okay, so Florian Groom is there. So let me go over those numbers again real quick. So he's looking at 1850, which we've got to, and then he's looking at 1900, which we are just about at, and that's more of a psychological number as he stated. And then we're looking at 1965, which is the other key number. If you can get to 1965 in gold, then you should be able to get to 2000 and then back to its all-time high. So Florian Groom is looking at these numbers again. It never moves in a straight line. It's going to be moving up and down during that time. So just be prepared. This isn't just an escalator on the way up. It's going to be moving both up and down. So it's good that he gave some price points and he's been hitting these targets. And if it gets there, and you look at silver right now, it should go below that 70 silver to gold ratio fairly easily. I mean, if it does get back to that all-time high 2075 and where silver is at right now, just above 70, we could possibly be looking at low 60s. Wouldn't high 50s be something great? So we'll see what happens as time goes forward. 2021 going to be an interesting year for sure. Precious metals. Interesting to see your comments as well. So go ahead and post them there. But outside of price, with everything moving at very, very high speeds, and sometimes it seems like it's even out of control, you have to find something that can store the value of your wealth. I mean, 2021 is going to see huge numbers in stimulus, and people are going to go back to work, and the markets and these things will lead to velocity of money. That's the missing ingredient for this inflation to come on that central banks want. It's that velocity of money. They're going to get you to spend. They're going to make that money move. They're going to make more money, chase after a fewer amount of goods to get that inflation going. So that's a great point from Florian Grumes. It's going to lead to inflation and maybe hyperinflation. Who knows? It's going to creep in and perhaps uncontrollably may start to wipe people out. I mean, again, middle class is getting decimated right now. I mean, let's be honest. Middle class is not doing so good. And after speaking to top people for years, this is what they say inevitably will happen. A systemic crisis is indeed locked and loaded. And this is something we have to understand, something we have to know, but not something we have to fear. Okay, if we understand it, we don't need to fear it. In fact, this is something that we can put in our back pocket and we can we can make work for us. Okay? It's not anything to fear at all. So as the economy looks good, we're all-time highs. We're seeing the markets hitting all-time highs, record numbers in equities. We're going to see more and more people start to disconnect. It's not going to be believable much longer, I suppose. And they're going to look towards things that are going to offer wealth protection, things that we already understand, especially when it comes again to systemic wealth protection. They're going to see silver and gold. They're going to start looking at things like silver and gold. And again, they're going to see things that you and I already know. And if you're on the fence, again, this is where we're at right now. We see these things that are coming down the road, and we need to start taking action. We need to position ourselves in the best way we possibly can. I want to play another clip from Florian Grumis, and this is where he really puts things into perspective and something we can definitely all take into 2021. So what are a couple things that may help push gold to break out above that resistance level that you just mentioned? I mean, perhaps will it be stimulus coming in next year? May it be the U.S. dollar continuing to weaken? In fact, do you see the dollar still continuing to weaken?
Yeah, I mean, it's been pretty weak over the last few days, surprisingly weak. But it seems the world wants to get more and more rid of the dollar. It's a process. I mean, we in the precious metal sector are talking about that for many, many years already. And then it's still a long process. And still, I mean, I'm looking, as I'm based in the Eurozone, so I'm also looking always the dollar against the euro. And it traded at 160 something in the financial crisis 12 years ago. Now it's trading at 121, coming from 1-to-1, more or less. So I don't care too much anymore about those fiat currencies, to be very honest. I know many people look at it, but I personally don't put too much weight on the dollar anymore if I want to figure out what gold is doing. I think gold is trading more and more independently from the dollar, not completely, obviously, but more and more people want to have gold. They need to have gold. And I think there will be other drivers, and especially now the technical drivers. Gold is in a bull market. Yeah. This, over the last 4 months, has been a pullback within a bull market. So I think it will come back up, and it will be a very interesting bullish next year. So
okay, interesting bullish next year. Before I get into the commentary section, what he says is pretty interesting. And when you do look at the US dollar, I think we even saw it go below 90 last week. I haven't checked where it is yet right now, but dollar's weakening. If you look at the Dixie, the DXY. And so again, some things that Florian is saying, it really does seem to be unfolding in the view that he has. So we appreciate Florian for coming on at that time, and he shared some really outstanding views there. Let me take a look at a few more comments. Let's see out there. Okay, a lot of talk on digital, copper, things like that. I see nothing wrong with copper. I mean, I think holding commodities would be a good thing, because in the end, they're the things that are real. If you have commodities. So anyway, commentary here as we start to wrap it up for 2021. I'd say, but I'd like to see what you say. Don't stop accumulating precious metals. Do not stop. Add to your stack. Add to your position. Okay, some of us have stacks. Some of us, we have positions. Keep adding to it. There are going to be opportunities out there. Again, it's not all bad news. Like I said, we put this in our back pocket. It's something we can use later on. There are going to be opportunities out there, and it's not hard to see how things are going to unfold. We laid this out all year, coming from different top people in the industries. We've laid it out. They've come on interviews, and then we've gone over it in live stream. So there are going to be opportunities out there. It's not hard to see how things are going to unfold. For the average Joe, scroll away what you can when you can. Okay, and if you subscribe to if you don't hold it, you don't own it. It's perfect. Nothing wrong with that. Keep adding to those stacks. And for the wealthy, look at moving assets to more favorable jurisdictions. Um, this is something that we commonly see wealthy people use as a strategy where it's not just about diversifying assets, but it's also about diversifying the location of your assets. And I'm going to play again Dave Drummond. You guys see this? I think I'm going to play it every time. Dave Drummond from Georgetown Trust. He puts it in a pretty unique way when we talk about moving assets.
I believe, like many people, gold and silver are stores of wealth. They could also be an investment instrument, but if you don't look at them like an investment instrument, if you look at them as stores of wealth, you'll note that they hold them very well. And then where the stores of wealth typically been put, they've been put in areas where there's low risk or smaller risk of those countries being invaded and the gold being taken. So do I think it's wise? Yes, I think it's wise to have some gold and silver within hands reach, some gold and silver within cars reach, and then some gold and silver within no one's reach, right? With that, I believe that there are places then to store your gold and silver. Looking for places like you guys have that capability. Look for those companies that have that ability and use it. Same type of thing, right? Redundancy.
Okay, and it is true if you are in that position where you may be looking at storing some gold and silver outside of your jurisdiction, by all means, go ahead and give us a call, shoot us an email. But in this, be mindful. Be mindful of companies that you tie in with. A company providing services such as storage in multiple jurisdictions, meaning they have in one country they have another um, open up in another country and in another country. So one company, but in a few different countries. Be mindful of this now. A company providing services such as storage in multiple countries means multiple jurisdictions, right? And that is, we sort of look at it as a big no no. And the reason is by diversifying with one company in multiple countries, you sort of actually do weaken your diversification and jurisdiction strategy. So you really want a company who is only in one place, where he only has that one jurisdiction. When they open up in another place, another country, now they have another jurisdiction to deal with, and that can dilute the whole purpose of why you went to one place to have that favorable jurisdiction. So, something to be mindful of. If you have questions, send us an email. Perhaps we could explain it a bit better or answer your questions when we talk about this. And 2021, it's going to be a year perhaps like none of us have ever seen. No matter what may come our way, we're going to get through it. We are going to get through it. We'll get through it together. We will. We will. We're going to be okay. We've loaded up on gold and silver, and we're going to find opportunities, great opportunities that are going to come about. All things being said, I look forward to 2021, and I hope you are too. And I just want to wish you all a Merry Christmas and a Happy New Year. And with that, I'll take a look at some of the comments here. Let's see. I do like copper. I saw those comments on copper. Copper rounds, they look great. I think some of the better designs are on the copper rounds. It's just unfortunate that copper takes up so much room to store, and the price is just. I mean, it's been moving up, but it's still really cheap. So you would need a whole lot of room if you want to store copper. So that's a little bit of the downside to copper, but I like it. I've said it before. I do like copper. I think there's some of the more better rounds, better designs out there. Let's see. Um, Seymour Rivers, old copper pipe stacker. Okay, plumber. He used to do some plumbing or something before. I know a lot of plumbers, they hung on to those pipes, so those copper pipes. So just throwing that out there. Let's see. Hostler of Carcosa will be an interesting day tomorrow with miners. Miners really been up the move, kind of volatile, but still positive. Miners have still been doing very, very, very well. Um, let's see. More copper talk. I have about 250 pounds of copper. It's quite a bit. Where are you storing it? Jeez. Okay, that's quite a bit of copper. Let's see. Mr. Nguyen, constitution or junk silver is the best start. Low premiums. And this is something we've also talked about, when, let's say, systemic wealth protection, when these things start to happen, when the crisis starts to happen with currencies in the US, especially, or even in your home country, probably the first things people are going to recognize as money are coins, the old coins that actually had silver in them. So that's a good start. It's a good place to start. And then eventually people will understand silver bullion, the 1 ounce sovereign coins, the eagles, the philharmonics, things like that. But I think junk silver is a good place to start, and then people will become more aware that there is a such thing as silver eagles and other things. Right now, a lot of the population, they don't know that these things do exist. So that's a good point there. Take a few more comments before we wrap up. A lot of comments on copper. Okay. Um, let's see. Anthony Winklejohn, SBTV. I went homeless to stack all silver everywhere. Get rid of material things. Get all the silver you can. Silver. Homeless, that's a tough one. I think a lot of us have been there, when we've been down a bit light in the wallet. Uh, but still, we understood what money was, and it's, you see that you know that. So wish you the best, Anthony. Hope you stay on the upside, on the uptick. Okay, so I think with that, I'll be wrapping it up here. It is the week before Christmas, so I wanted to throw in this little background here. Hope it was okay. Um, Let me see, except for that part. There you go. Now it's closed up. Didn't see it. Um, you guys take care, and you have a really good Christmas ahead. Very Merry Christmas ahead, and a great New Year ahead. Take care of each other. That's the most important thing. We need to do that. Be a blessing, not a burden. And we'll see you guys. I think maybe next week. Maybe next week. We'll see you guys. But take care. Keep stacking. Watch silver and gold. Prices are on the move. And as always, saddle up for what's coming ahead, and silver up as well. See you guys. Take care.